Hey traders, welcome back to the Bear Market Small Account Challenge. This is the Asymmetric Compounding Strategy, where I help traders like you grow a small account from $500 all the way up to $25,000 in just 1 month. Today is Monday, May 5th, 2025, and if you stick around to the end of this video, I'll be revealing some of my personal trading secrets that have helped me reach over a 95% win rate. So make sure you watch all the way through the end of this video. And let's go ahead and dive in. The purpose of this challenge was to grow a small $500 day trading account to $25,000 in just 1 month, using an asymmetric compounding strategy and disciplined risk management. And as of today, day 11, this challenge is already complete. And that's because my small account is no longer small anymore. My account has grown from $500 all the way up to $25,607.70 in just 10 trades. That's a massive 5,022% return. Or put another way, I have grown my account 51 times in a little over 2 weeks. And yes, one of those days I didn't even take a trade. That's the power of asymmetric compounding, when you're trading only the highest probability setups. So let's break down the trades that made this possible. On day 10, which is Friday, May 1st, this trade was part of our live day trading session inside of our private Discord channel. This past Friday, May 1st, the trade of the day came straight from one of our early morning alerts at 5:09 a.m. Mountain Time. The ticker was FRGT, which is a low float former runner that was already up 70% on high volume. It was aggressively reclaiming multiple key Discord levels, setting up perfectly for a bottom bounce reversal. What caught my eye was the momentum behind this move. This wasn't just random volume. There was a news catalyst and a clean technical reclaim that aligned with one of our pre-planned levels. As soon as price broke through that $1.50 level and held it as support, I jumped in using a gap and go strategy, placing a limit order just above the 5:16 a.m. candle wick. That gave me an entry of $1.60 right at 5:17 a.m. Mountain Time. From there, it was a textbook pre-market breakout. Price surged through $2.20, then $2.80, and I managed the risk with a trailing stop loss strategy, increasing my stop loss level by level as price ripped toward the pre-market high of $3.92. I started noticing doji candles clustering around the cautionary Discord level of $3.35, which told me buyers were losing steam, and that became my exit target. I placed a limit sell at $3.35 and locked in a total profit of $11,858, all in less than 1 hour. This is exactly the kind of trade we love inside our community. Fast and clean, high conviction setups with real technical analysis behind every move. So moving on to day 11 in this bear market small account challenge. Our AI-assisted Discord alerts triggered this morning for GPUS at 5:22 a.m. Mountain Time. At the moment of the alert, the stock had just surged an impressive 173% in about 5 minutes, and it was skipping over multiple key Discord levels. And like I teach my pro traders, when price skips levels, it needs to pull back and retest those zones as support before valid continuation. And that's where we look for the best breakout trade entries. And as you can see, price pulled back and gave a textbook pullback entry between $2.85 and $3.20, setting up a push for the pre-market high of $4.66. Now, I didn't take any pre-market trades this morning. Whenever I see a parabolic stock move that extreme in such a short time, it's actually my most hated pattern. And I usually avoid that kind of aggressive spike. And that's what I teach traders in my group to treat with caution, because it often triggers FOMO, and that's where beginner trading mistakes happen. So I only enter when price has proven itself, either by holding skipped support levels or reclaiming something like the 50 EMA or the 200 EMA. In this case, I chose to wait. But guys, I gotta tell you, this morning I was way off my game. And that's because over the weekend in my family, we had a pretty serious family emergency, and my daughter ended up in the hospital. And that really shook us up. Then today, just before opening bell, I got distracted dealing with some stuff inside of our trading group. So I wasn't as sharp or as focused as I would usually be. The result? Well, I took a sloppy trade that totally ignored my normal process and flow. I could have crushed this trade today. This stock gave over 400% gains with multiple opportunities to participate. But instead, I took a 3-minute scalp that barely made a dent in this big move this stock made today. And because I'm doing a small account challenge, I get 1 trade per day. And today's scalp used up my one and only chance for the day. So let me show you how that one played out for me. Just before opening bell, GPUS held the 200 EMA. It reclaimed the 50 EMA and began climbing out of this pre-market consolidation. I saw the move a little bit late because of all I was dealing with, and I entered on this pullback at 7:52 a.m. Mountain Time. My entry was $4.14. My stop loss, and this is where I messed up in my opinion, my stop loss was at $3.90. That's a 24-cent risk. And my criteria calls for a minimum of a 3-to-1 reward to risk ratio. So I needed at least $4.86 as a target. But price still needed to deal with this pre-market high resistance at $4.66. So that became my actual target. So this trade really didn't meet my normal trade criteria, and I knew it, but I took it anyway. And so I sold at $4.67, right above the pre-market high, locking in only about a 2-to-1 reward on my risk. And after that, price just kept climbing. So because I used up my one trade, I was out. And I missed the rest of what turned out to be a perfect trend continuation play, with price riding the 50 EMA all the way to the high of $8. And that $8 level was a critical level, okay? It still is a critical level. And price is going to continue to treat it as that. But here's an important tip on risk management for day traders. At 8:40 a.m. Mountain Time, that's where we saw the only sketchy candle on this entire chart. It was a massive tail down that broke all the way through the 50 EMA, and it nearly touched the 200 EMA before instantly recovering. If I had used a hard stop on this trade, I would have been taken out at a deep loss. And I know a lot of traders out there probably were caught off guard on that one. But this is exactly why I always teach my group to use mental stops. I only exit if a candle closes below my stop level. And in this case, that would have been our Discord level of $4.40. And no candle ever closed beneath that level. That trade would have remained solid. So for those of you struggling with getting stopped out too early, especially during volatile moves or on momentum stocks, consider using mental stops with disciplined exit criteria. So this trade today on GPUS was packed with real trading lessons, and hopefully it helps those of you working on your trading discipline or building consistency with small account trading. Remember, even if you miss the big move, the market will always offer another opportunity, but don't let a bad entry or FOMO impulse sabotage your whole day. Now, as promised, I told you I was going to give you some special secret tips that I have in my arsenal for achieving a 95% win rate. And it's the short float trap that fuels my edge. If you want to understand why I've been able to maintain over a 95% win rate, it's not just charts. It's not just entries. It's knowing what's underneath the surface. And that's what other traders miss. So let me break it down for you. When a stock has a high short float, it means a large chunk of its tradable shares are already borrowed and shorted. That's pressure building. Now, at a high borrow rate, shorts are paying a painful fee every day just to stay in the trade. That creates urgency. But Here's the trap. If that same stock has a low float, volume floods in, and it starts reclaiming key levels like the 200 EMA or the Discord levels that we show, those shorts are stuck. They're underwater and they're paying interest and staring down at a breakout. The only way out? Well, they've got to cover, and that panic covering adds fuel to the fire. So that's your short squeeze. Now, pair that with the short ratio. If it's high, it means it would take days of average volume for shorts to exit. That's a traffic jam. So when volume does show up, they can't all get out. And that's how you get violent pops, halt chains, and runaway moves. And that's the kind I wait for. This is the stuff that separates smart momentum traders from random chasers. It's not luck. It's not hype. It's understanding where the pressure is, how long it's been building, and when that fuse is about to blow. So guys, if you're serious about leveling up your trading game and achieving a 95% win rate, consider joining us today at MomentumStockTraders.com. As a pro trader in our group, you will get live trade guidance on every trade we take. You'll get access to my private Discord channel, plus all of our scanners and our amazing Discord alert system, which is AI assisted and includes these amazing institutional key levels. You'll get full use to my charting tools, my watch lists, my alerts, and you'll get end-of-day trade breakdowns on each move in detail. But best of all, you're going to get real-time one-on-one mentoring from me personally and access to a great, fantastic group of serious day traders in the community. So if you've been struggling and you're finally ready to learn how to trade with purpose and understanding, this is the place for you. This isn't a copy my trade service. It's real education, real trade guidance, and a real platform focused on growing your skills and helping you build your own edge. And the community inside is crushing it every day. So if you're ready to stop second guessing yourself and start trading with clarity and confidence, head over to Momentum Stock Traders right now and join us today. And thanks so much for hanging out with me for a few minutes today. I hope these breakdowns have given you amazing insights and education and helping you to understand why price does what it does on a chart. And remember, stay smart, stay patient, stay focused, and let's grow those small accounts together. And I'll see you in the next video.